I'm back with some more earnings charts because who can neglect the retailers? And they're pretty important this earnings season because we're learning a lot about what's going on with the consumer in the economy. Are we in a recession? Has the consumer really pulled back in a lot of these discretionary areas? It's kind of hit or miss so far. So we're going to get a lot of retail names. And they're starting this week with some of the big kahunas. You know who they are, the Walmarts, the Home Depots, those guys. But we're also hearing from some other big cap companies this week that I thought are kind of interesting. And so I wanted to bring them here to show you what's happening with these earnings charts. And some of these are on the industrial side, a few tech names also going this week. Let's dive right in and check out these charts. Okay, the first one out the gate is Home Depot. Now, I haven't looked at Home Depot in a while because it usually reports a little awkwardly on the week when I do these videos. So I don't normally cover it, but I felt like I needed to this time. Now look at it. It's got a great earnings surprise track record. The only miss was right when COVID hit. And it wasn't even that big. If you click on the little arrows, you can see almost 8% miss. But otherwise, it's met or beat pretty consistently ever since then. So I'm expecting another similar consistent beat or meet from Home Depot. But you can see after busting out during the pandemic, it's mostly traded in this narrow trading range, and that is kind of where it's still hanging out. Year to date here in 2024, it's down, but just like about 1%. So it's just kind of hovering there, waiting for some kind of catalyst. But with the consumer pulling back, and especially on some big ticket items, but we're going to hear from Home Depot if that's still happening. You know, people are not remodeling their kitchens as much anymore, or the bathroom, or bigger things like that. What is going to be the catalyst for Home Depot? It's not that cheap, still trading about 23 times forward earnings. And you do get a dividend paying 2.6%, which is okay, but not that great of incentive to stick around in the stock. Will this just go cheaper, maybe back to 2023 lows? I don't know, but this is something I'm going to be watching for the earnings report and also in over the next couple of months with these home remodeling companies. So that's Home Depot, ticker HD. And another stock that has kind of been in the doghouse recently is Cisco Systems. Now, Cisco also had a big rally here in 2021 with all the tech names, rallied to probably what I would think was maybe new all-time highs there, but certainly multi-year highs, as you can see, 5-year highs at the end of 2021. But then it's just been weakness ever since. But it has a perfect 5-year earnings surprise track record, which just goes to show you that just because you get those meet or beats consistently over the years doesn't necessarily mean the stock is going to follow. Year to date, the shares are actually down 10% and not really holding any of these levels. And it's still cheap though, PE of 12.9, but it's been cheap for a while now. And interestingly enough, the company that refused to pay a dividend all during the dot-com boom years and for quite a bit of time past the dot-com boom is now paying among the highest yields, and the highest yield of the stocks I'm going to cover today at 3.5% on its dividend now. So are you just buying this for the dividend? Maybe some people are, but shares still weak here. So we'll see what Cisco has to say. CSCO is the ticker. Then we're going to switch back to the retail side with Walmart. It is, of course, one of the big kahunas, and this one is much loved on the street. You can see it didn't really get that big of a boost out of the 2020 COVID time. Didn't do much in 2021, 2022, but started to perk up in 23 and then really has taken off here in 2024. Year to date up 30%, which is a big move for a big retailer like Walmart. But the PE has gotten really expensive. PE of 28 right now, Dividend is yielding only 1.2%. This is actually kind of a slow grower. And to see a PE of 28 on a slow grower is a little bit disconcerting for someone like me. But can it hold this? Does it have enough firepower to keep rallying this year? Or will we see a retracement back there, the 2023 lows as well on Walmart? Unclear, remains to be seen, but this is one everybody's going to be watching. Then we're going to move into big equipment manufacturer, Deere and Company. It's been struggling this year and has been doing layoffs, but look at the stock chart. It has a great earnings surprise track record, just 2 misses in the last 5 years and only 1 since the pandemic started. But the shares have gone nowhere, right? Nowhere except this narrow trading range. And the shares are cheap now, trading at 13.6 times forward earnings. But that's not really cheap enough, apparently, to get investors really interested in the stock. It's very cyclical with Deere and Company. Farmers were buying in 2020 and not so much the last couple of years. They haven't had to replace the combine since then. And that now it's expensive too, right? Money is more expensive. So we're kind of in this wait and see period. Year to date, the shares are down 13%. But again, not all that cheap at 13.6 times. That's a value stock, but not single digits. And dividend yielding just 1.6%. So that's what I mean about Cisco paying 3.5%. It's kind of blowing away some of these old economy stocks that you normally would associate with the dividend, right? Deere, Walmart, Home Depot even. I'm thinking I'm getting the dividend with them, and I am, but not the juicy yields like I'm getting with Cisco. So this is Deere. I'm going to be watching it, ticker DE. Then we're going to wrap it up with the stock that is well known, but you might not be watching it, H&R Block, ticker HRB. It is now a Zacks number 2 rank. It has very good fundamentals, PE of just 12. Year to date, the stock is up and hitting these new 5-year highs, as you can see, up 16%. So more of a steady Eddie than Walmart, which is up 30%. Dividend 2.2%, so kind of in the middle there of all the companies we've talked about, and a good earnings surprise track record. Just the 3 misses, including all of these are really during the pandemic, if you include this first one, which was on March 5th, but that's kind of before the shutdowns in America started happening, but it was happening that month. So I guess we'll blame that on COVID, right? But probably not, since it was the quarter before. But still, very good track record and continues to do so with a beat of 6% last quarter. Can they beat it again? This is the tax preparation company. Is it really this hot? But it's still cheap at 12 times. I don't know, but this is the best chart of these 5 this week. And I'm going to be tuning in to see if they can keep this momentum. So that's H&R Block, ticker HRB. We're also going to get a couple big Chinese retailers. JD.com is going to report. That chart looks terrible. I think it's at 5-year lows. Alibaba also reporting, BABA. That chart also not looking too good. Any of the Chinese stocks really aren't looking good. But what are they going to tell us about the Chinese consumer? We've already heard from a lot of American companies that are big in business over in China, and it hasn't been good. So I'm a little bit leery on what's going to happen with these Chinese retailers as well. But we're going to find out if there's any turnaround in the outlook there. Especially watch JD.com, which is a little more consumer focused than Alibaba. But as I said, a lot going on with these retailers now at the end of earnings season. And I'm going to be bringing you more next week because I can't say no to the retailers. So we're going to have another video next week. So you want to tune in if you're interested in the retailers to see what I'm going to talk about next week, because there's a lot going on. Some retailers reporting pretty solid reports without much of a slowdown, but others really seeing the slowdown happening now as the consumer pulls back. It's hit or miss, And you don't want to miss a single episode of these Earnings All Stars, because I'm going to be bringing you all of this as we continue during this earnings season. And we still have NVIDIA yet to go as well. So be sure to get all of our videos at zacks.com/YouTube. And I'll be tweeting out the videos as well. But be sure to get them. And I'll see you again next week with some more All-Star charts.